thank you for joining us today morning. This is the first time within the entrepreneur conference that we have launched this new spec, which is family business. And really, India being so dominant by family businesses, we want to bring a fresh perspective to how family businesses can be run as business families. And this means that, you basically have to have one arm which is about making income and one arm which is about making wealth or creating wealth for your business. And with that in mind, how do we address or how do we sort of put our family businesses in the right direction? How do we make investments? That for the next 3 years, we're going to look at that and how times are changing for family businesses and what is it that should now be done to steer your family business in the right direction. So we've really got a stellar panel this morning and they've got some great ideas. I did some offline discussion with them and we picked up some great thoughts about how family businesses and particularly family offices, if you're setting up one or you already have one, how should you actually manage it well so that you're able to draw the right kind of output or the right kind of wealth that you're looking to create for your family business in generations to come. So thank you very much, gentlemen, for joining us this morning. So I'm going to start with you, Gaurav. Today we see that family businesses are primarily making a lot of investments. And I see not just in probably your Delhis and Mumbais, but also in Tier 2. I was in Dehradun just a month back, and almost every fifth person I met there wanted to ask me which startups to invest in. So there is a whole load of interest that is coming out there in terms of how a family business, which has made some considerable sort of name and fame for itself over the years, running a traditional business, wants to understand where to go. So, I know that there are today a lot of family offices or family businesses making direct investments and some who are going through a very structured approach of setting up a family office and then going out. So, what are your views on how do you see a family office structure happening in the times to come for businesses who are now looking to create a separate wealth arm for their business?
Thank you, Ritu. I think over the last few years, what has happened is angel investing has obviously become quite fashionable, but I think it is a serious approach that one should take. And as family offices are evaluating this, I think it's an honest conversation that the family needs to have and understand how committed they are to making this alternative investment. It's about their allocation strategy. Because running an arm to evaluate opportunities and manage them and take them to, say, a successful exit requires a lot of time and effort. So I think the question that a family office should ask is, how committed are you? How many resources can you actually allocate to that? And based on that, take a call whether you want to do it directly or perhaps take a fund-of-funds approach. But I think that's a debate that, me and my colleagues here will have over the next 20 to 30 minutes.
Sure. No, thanks for sharing that. And just to sort of take what you said forward, would you advise that a lot of family businesses should do direct angel investing, and what are sort of the pros and cons of it?
I think if it's strategic to the core business where there is a lot of know-how, perhaps selectively take exposure. But again, maybe go through some organized structures or avenues to get access to the right deals. Because, investing, they say that the easiest part of investing is writing the check. The toughest is to actually get the money back. So I think it's worth evaluating it, but do explore the avenues that are available. And thankfully, the day and age that we live in and where the ecosystem has evolved to, there are a lot of options, to investing.
Sure. Brijesh, I'm going to come to you, and I understand that, Gaurav just mentioned briefly about funds of funds, and that's how traditionally most family offices have been operating, wherein they've sort of, added their fund to a VC fund or some other vehicle of investment, and then those investments were made in startups. So, direct investments used to be less by family offices in startups, and at the same time, there was sort of less acceptance also of the other way by startups for a family office, because they did not know how to give them an exit. So how do you think family offices' approach to investment in startups or some other asset class that they are looking at has changed?
Namaskar. Before I answer, let me give some data points that can come as a background. So if you look at Asia's family office, nearly 68% of them have nearly close to around 8 to 10 people as part of their team, which in India is gradually getting into that part. If you talk about number of families whose income or net worth is more than 100 million, in India it's supposed to be 1/3 in Asia. So there is a lot of capital sitting out there to be deployed. The new age, if I can say, folks who are right of 20s and 30s, having seen the world and looked at the opportunities which is coming to play, they are actually driving that part. So if I can talk about one of the family offices, they are now from investing through angels, they're actually building up their family offices to look into how it can, be strategic to what they are part of it, or as a part of asset allocation and diversification. So clearly, there is no right approach. It all depends upon how the family office is structured, what they are looking at, and how within the family office, how you are also given, let's say, ceding of control to the younger generation. That becomes, more. One more point, if I'll not say founders, because I'll say promoters, because promoters actually promote and forward. For promoters who are looking at new capital, family offices can be a very good option, because you need patient capital. Rome was not built in a day, so you need patient capital, and that is where family offices can actually play an important role into the whole ecosystem of what we are going through currently. So I'll summarize in saying, you have to find what is good for you. You have to see how it can evolve and move forward. Saying no is more important than saying yes, because you got the right fit, and opportunities will be there for everyone in this room to make big money in the coming decade.
So just to sort of add to what you've already mentioned, particularly on the team size, that a good family offices need some people to manage, because obviously, when startup or the asset class interest starts to come, you need to be able to evaluate them. So how do you feel in India a family office will look like in maybe a year or two down the line? And what would be the structure? And even if for somebody who's starting, let's say a large family business, they're starting a family office, what should be a good structure for that family office to begin with?
Yeah, again, this will evolve. But having said that, the most important thing is the person running the family office believes in this space. That is the most important part. See, another thing is that getting talent. So that is a huge challenge. So today you don't get a analyst or a principal or a junior analyst, whatever name or designation, straight into the space. So how you're going to address that? Do you have the energy? Do you have the resources to train, cross-train, and set up? So it can evolve. It can start slow, and then you have a structure. I'll tell you. So we are a VC, and how we structured was that what is it we want to do? And once we had that in play, we had our own playbook, and you got a team for which you'll also. Salary is not the only thing which will attract. It is also how much you're going to also pay carry, in the whole thing, because you're looking at long term. And in family offices, you're looking at patient capital. Do you have that patience to be there to get that exit and the carry part of it? That is one part. The structure could be similar to how it could be there, but it will evolve. There is a need for the talent pool is so limited, and I can tell you that, so limited. And we need to work together, be it the VC or the family office, everybody in this room, we have to work together to see that, that talent pool is available they are coached and, move forward. So that typical structure would come into play.
Interesting. Amit, Brijesh just said about patient capital. And, why is the family office capital called patient capital? What makes them so patient? And, VCs have so much sort of pressures of exits and everything. So how come family offices are able to keep that patience when, when your other sort of counterparts are not able to do it?
Good question. Just for everyone's benefit, Catamaran manages the Murthy family's assets, and we have multi-sector and multi-stage investments. I think the the family office, the way they're structured, as long as they are not a fund, it's a long-term pool of capital. And I just want to let everyone know, patient doesn't mean it doesn't need to compound. It still needs to compound, but having a family office as an investor on your cap table for budding entrepreneurs, it gives you flexibility, A, from a capital perspective, B, from, getting help from the family office as well. And this could be, because the entrepreneur on the family office side has experience of scaling businesses. We have few on the podium here as well. Our family, we've had, business scaling to billions of dollars in the services space. We can help the budding startups, from a GTM perspective. We can help them on governance framework perspective, because, that's something, Infosys stood for. So there are multiple of those elements that a family office team can provide coming onto the cap table for an entrepreneur. Coming back to your patient capital, it does give, a flexibility to an entrepreneur. We've seen a couple of bad cycles with COVID. There were a couple of consumer companies in our portfolio. And fortunately, some of the VCs had to exit right in the middle of the COVID because their fund cycle was in year 10 and 11. While we have been investors for 12 years and continue to do so. So this is just an example. Gives the entrepreneur a flexibility to plan their capital allocation. Gives the entrepreneur the flexibility to get help where they need it, be it governance, be it team building, be it scaling. And, ultimately, that's something family office as an investor, which can work with a VC as VC investor on the cap table, can add value to the portfolio.
So do you think, honestly, if I were a startup, that I would love that to be in that situation. VC pressure is very huge, and I've been talking to startups, and they keep telling me that, it's easy to take a VC fund, sure. But, after that, it's sort of quite maddening for them to sort of run their own enterprise because right. The pressures are very intense from the VC. So do you think that, in some sense, it's better off, when is it better off for a startup to go for a family office investment rather than a VC investment?
Well, it's ultimately the entrepreneur's choice. But, if you ask the entrepreneur who is he comfortable calling, sometimes he says, the family office folks are more approachable. Sometimes the problems that the family office teams are able to solve are slightly different. As I said, governance issues or GTM help. So I think from an entrepreneur perspective, obviously getting a top tier VC private equity is a sign of validation, and which is now getting more and more accepted, especially in the Indian ecosystem as well, as having a family office is also a sign of validation. So I think it's a fine balance. It's a fine balance of having what kind of investors you need. For example, Catamaran, we pride ourselves as, we back companies, be it private or public, right? So sometimes entrepreneurs like that. Sometimes entrepreneurs like that, okay, this investor is not probably going to, sell the stock when the potential IPO happens, just to give you an example. So family office gives those benefits to an entrepreneur. So ultimately, it's a fine choice.
Yeah, please.
This beautiful point. The way to look is as collaborators, not as competition. So let's say if a VC comes in early, and the VC makes a quick decision, like Gaurav makes very fast decision whether we should go to him. And so what happens is that it gives that early impetus and growth, to the promoters and to the entity. And good governance comes in play, the decision making from a family office, gets much easier because you've already seen the proof of concept of proof of budding and what is there in play. So, in this ecosystem, just as in jungle, you need all kinds of animals out there. So, a collaborative approach is the approach which I do see, going forward.
Sure. You want to, yeah?
Yeah, so see, I think ultimately it is the entrepreneur's choice, right? And I don't think money has any color. So now whether it comes from a VC or a family office, I think entrepreneurs, in my opinion, should be indifferent. It's really, as they're going through their own diligence and looking at where the capital is coming from and who is behind it and what value add they can provide are sort of the key things that an entrepreneur should look at. But I think we're all going to be very active in the ecosystem, whether you're a VC or a family office. And it's, as was just pointed out earlier, it is a collaborative effort for the ecosystem.
Ankit, let me ask you this. And you're a family business which has gone into a family office. Now, when you look at an investment in a family, through your family office, what kind of ROI do you expect? You have so many options to invest in. So obviously, when you make an investment, how do you weigh it and what kind of return do you expect?
Let me try and flip the narrative. A family office will always have something called a IPS or an investment policy statement where they decide what is going to be their allocation toward debt and equity or what will be their allocation toward private market investments. And most of the time, more often than not, there are wealth managers involved who always try and push you towards a certain agenda. Now, for example, IIFL or ASK Wealth, Edelweiss, these are some of the Kotak. These are some great names, been around in the market for quite some time. And their advice to you always would be to have most of the income focused on public markets. 80% to 85% of your investments have predictability. And the family office is still very conservative on private side of things and manage the churn of public and private together. I think, and that holds true for us as well, which is why when I founded Capital 8 3 years ago, we said that the private market will be completely different from the public market. Obviously, the public market investments are still done by the family office to the tune of 10% or so. But then the private arm or the investing arm becomes completely only private investments. Now the ROI is, and that's the reason why it's important to have a very clear structure, how you want to, have your public investment, because the ROI over there versus the ROI over here is very different. And more often than not, family offices say that this is very hard-earned money and we want to make sure that we don't have wealth. We are not focused on wealth growth or wealth creation because the wealth creation has already been done and that's why you're funding that corpus of the family office. I think wealth conservation then becomes a very important focus. And to that extent, at least I can speak for myself, but we look at anything upwards of 25% IRR on our investments in private space.
Sure. Another thing I feel that family offices could probably do, which maybe for VCs it's tough to do, and it's not as if they don't create that network to do it, is to be able to give access to startups for a lot of things, just because that family business already exists. Now, this could be either in terms of markets or entering new markets or even probably some, vendor contacts which a startup may need. So what is your view? I mean, anybody can take this in terms of what kind of access a family office is able to provide to their investee startup, which sometimes VC is not able to do.
I can go first. Usually, when the investments are done, the family offices always have two lenses. A, on a pure play financial transaction where you invest and then you expect that money to be repaid or the principal to be repaid, and then obviously you look for the margin distribution after a certain number of years. But it's actually upon the founders on how they leverage that relationship and use that access to their favor. Uh, it's, un- I feel it's unfair that the the investor alone has to pick up that entire operating role of giving that access because they might or might not know what the founder wants. And similarly, and I think it's a matter of time where they just, happen to build some trust with each other. But more often than not, if the founder is able to identify the access points or the leverage points, I think it's a winning relationship.
I could chime in here. There are two aspects to it, one more strategic and one more operational. On the strategic side, obviously the entrepreneur knows the business, so the family office will only add the experience of scaler, right? The family office entrepreneur has scaled his or her business. The team in the family office has had experiences of scaling businesses, so we can help with say 1 to n in that space, or give a 10,000 feet view of this is how it's done in services business, this is how it's done in enterprise business, this is how it's done in consumer business. But ultimately, the specific strategic aspects will have to be done by the entrepreneur. But on the operational side, just to add on this, a lot of times, governance frameworks, like early startups, typically say, "Baad mein kar lenge." We are very, very small. Infosys in its journey probably had the MIS ready on the second business day of the next month in its first year. So, all the governance frameworks, governance mechanisms, just the rigor of analyzing your own business through different lenses. So some of those perspectives is something definitely players like family office can add to.
In fact, Ankit rightly said, he's not the Arjun. The promoters run the business, right? And whatever, all the advice which can be given based on the experiences and based on the business which is being run comes into play. One more thing, like if you all Harry Potter fans, help will be given to those who ask for it. So, you need to ask for it. You cannot, you don't know on the outside. So if you look at some of the things which we have been doing is, on the brand, does your brand talk about it? Does your brand talk what you're doing? So that is one part. Governance is now become the key, but governance was always there. It was like, we kept it aside for, why was it kept aside? That was the thing. You also talk about, operationally, you're talking about GTM, you talk about CAC, you talk about a whole lot of things, like, some of the folks in this room and on the dais, the kind of experience one has globally, that can be leveraged. And it has to be very transparent, among the promoters and also the investors, because you have to be very clear that you put in money, you can't expect, and just like the stock markets, 10% return a day. You cannot. It is a journey, and we have to be very clear on that part. So as long as that handshake is there, all help, all support, all guidance is there. Because today, the promoters can choose with whom you want to work with, which was typically was not the option few months or years back. So you should take use of that opportunity and see who fits well into your journey and growth stage.
On now, probably one of the final leg that I would like to touch upon is exits. Now, how do family office look at exits? I know he said that, compounding is equally as important for VCs as it is for family offices. So, what are your best exit options over the years that have been observed, from public markets to, VC exits to, how does it work the best?
Well, I think this is still too early. If you look at the level of investments that have been happening in the startup ecosystem, at best we can say that it's been a 10-year journey. So we're still at a very nascent stage in the overall cycle. The IPO markets have become an option, and they did become an option a few years ago. But again, those markets are not deep enough to absorb multi-billion-dollar exits and tens of them. But the future is bright. I think in the years to come, the IPO markets will get deeper, and the opportunities will be there. But I think M&As and secondaries will be a very realistic outcome, both for VCs and family offices.
Yeah, I think we believe in theory that back the right entrepreneur and the right sector, exits will happen. So I think agree with Gaurav that the IPO market still getting to its potential. So all options are on the table. Secondary exits are increasing now. M&A keeps happening at its own pace. It's obviously global markets are different. So as an office, we evaluate it on case-by-case basis across all three. Okay.
I mean, the journey of exits has been very organic for many companies in terms of it usually starts with the seed investment, and then the number of up rounds decide the value of that particular company, which the next set of investors put the value as. Now, if you see the trajectory of the Indian startups ecosystem so far, the entire, and we were just discussing this before, the IPO for the startup ecosystem is very critical. Because it's very matured in Europe and US. In India, consumers needs to start believing that there is a tradable option of startups on the bourses. And until that confidence comes into the retail investors, they will continue to view startups as just another asset class, which are probably for the high roller VCs and the PE funds. So until and unless that trust is injected on a public platform like trading on a stock exchange, I think we are still some time away from leveling up with the Western countries.
From the VC side, like earlier when the SHA made, there used to be like, okay, we can also do IPOs. But today it has become much more realistic. And let's say if I put a number to what it is, so 30 months from now, can we see something of that happening in any form or any manner? One should not be surprised if that typical market can happen or could happen with the kind of things which are happening in the background. It is there. But the most important thing is that today the promoters do believe that besides the secondaries, so our exits typically has been through secondaries as of now, till date. But sometime in future, as I said, the next 30 months, we could also have an IPO, and maybe that could be an opportunity, being there and in play.